What is going on, investors? Hopefully, guys are having a great day out there. Probably a lot better day if you don't own FuelCell Energy Corporation, ticker symbol FCEL. Stock's down about 11% today, and I'll tell you why. It is because they reported their Q2 earnings, and I hesitate to use the word earnings because it was more losses than earning, and we'll talk about that, not just from an operating perspective, but from a gross profit perspective. We are losing lots and lots of money with this company. And I'll tell you why that is such a bad thing and such a big red flag when it comes to stocks like this. Now, this thing has been on a massive downtrend really since the beginning of the year. This stock was up at $25, $30 per share back in January, February, and even March, a little bit higher. And we're now trading just under $10 on this one. But maybe from a technical perspective, are we forming a bottom on this one? We'll talk about that as well. Now, I wish I could say that I didn't warn you on this one, but I did. Back in January and in March, I published a video on FuelCell Energy and Plug Power in general, just telling you what I thought about these companies and how I thought it was negative. Got lots of comments. Boy, you could go back and read these comments, and lots of people said I was wrong, but it turns out I was actually spot on this one. So we'll see if that continues, okay? We are going to take look, I've been negative on this company, but I'm going to take an unbiased view. We're going to pull up the numbers right now and jump into them and take a look, and we'll see where this one's at, okay? Not only from a fundamental perspective, but from a technical perspective as well. We'll take a look at this one and see if it's worth buying. Look, it's down big, so it could create a buying opportunity. So we've down 3 months here ended. We got our right-hand column is last year, left-hand column is the most recent quarter, which they just announced today. We've got these revenues here. We've got product on the top line, service and license, generation, and advanced technology. So they break out all their different business units. We got product on the top. I don't know if that's just a placeholder or what, but they got no product revenue over the last year. We've got service and license. Look at this. It went from, this is about $7 million in revenue last year, all the way down to 660,000. These figures are in thousands. Sometimes I get people that don't read these documents on a regular basis. These numbers are in thousands. This is not $660. This is $660,000. So I get people that are often confused by that, and it is easy to get confused by that. I just wanted to point that out. We've got generation here. We go from 4.6 million up. So we had increasing revenues there. That's nice. Up to we'll call that $6.2 million. And then we've got this advanced technology revenue. That's basically flat. We went from about 7.3 or so to 7.1, essentially flat kind of year over year. Now we've got our total revenues. Here's red flag number one. This is a problem, especially when you factor in this company's got a $3.9 billion valuation. The trend on the stock is relatively down, at least over the last couple months. Look, even over the last 6 months, this stock is up. It's incredible. I don't know if those figures are right, but if you would have bought this stock at the right times, you probably aren't deeply underwater on it. Now, total revenues went from 18.9 million down to 14 million. Okay, so we've got declining revenues. That's a problem considering you got companies like Facebook and Apple and Microsoft and Google and Tesla and all these companies out there that are growing their revenues. Not only they're growing them, but they're growing them at double digits. And these are already gigantic companies. So you got kind of micro cap startup companies like this, and they have declining revenues. That's a problem. I wouldn't be very excited about that. Now, here's what I'm also this is what brought on my very bearish thesis on these stocks several months ago. Okay, we've got our product revenue. We spent 1.9 million. Okay, this is our product revenue. We spent 1.9 million to make $0. Take a look. In the previous period, we spent 2.8 to make $0. That's a problem. If your kids had a lemonade stand out front and they spent $1,921 to operate the lemonade stand and they had nobody buy lemonade, I think you'd have a conversation with your kids about how they didn't run a very good business. I think we got to have that conversation right now as well with FuelCell. Here's our service and license. Maybe product revenue is a loss leader. We'll take a look at that. Okay, so we've got our service and license. We spent 2.9 million to make 660,000. So they lost money there as well. We've got generation here. We spent 9.4 million to make, unfortunately, 6.1 million. So we're losing money there as well. And then finally, we have advanced technologies. It's a little early in the morning. We got to say these things a little bit slower, maybe 4.5 million to make 7. So that's their one profitable business unit. And you notice it was profitable last year as well. We spent 4.2 to make 7.2. So we've got total cost of revenue. Again, these are not all our costs. Okay, we've got other operating expenses, what I'll get to here in a minute. We've got administrative and R&D cost. Okay, these are not our only costs. These are only the cost to get this revenue. So total cost, it's like if you had a lemonade stand, this is the cost of your lemons, your table, you know, things like that. It doesn't include marketing. It doesn't include employee salaries, things of that nature. Okay. Total cost of revenue came in at $18.7 million. Again, we only had $14 million in revenues. This is a problem, okay? So that means our gross profit is negative. They are literally selling their product less than what it actually costs to make. So that's a problem. Now, if you're a customer of this is why when people get in the comments and say, well, Walmart's a customer or Amazon's a customer, guys, the executives at those companies aren't stupid. They look at these numbers, unlike a lot of investors, okay? And they see that they're literally giving away the product, okay? You think Walmart wants to get product for, you know, fuel and those types of things for free or basically for free? Yeah, well, they'll come to a company like this since they're selling it to them at a loss, okay? You notice in the previous period, we were basically at break even. So to some investors, it looked like maybe they were at a turning point last year. Well, we've turned negative and that's a problem. Now, I talked about how that is not the only expenses we have. We have these administrative and selling expenses, and we also have R&D expenses as well. Those went up to $9.6 million. Call that $9.7 million. We were at 7.1. Again, we have total revenues at 14. We have these total costs of revenue sitting at 18. And then we've got administrative costs sitting at 9.6 million. And then we've got R&D costs sitting, we'll call that at 3 million. Okay, so we went from 1.1 up to this 2.9, call it 3. That gives us total cost and expenses at $12 million. Those are total operating expenses. So we've got these total operating expenses at 12.6. We've got total cost of revenue at 18 million. You add that up, that's 30 million. Now we've got our revenue. We get to add that back in. That's, you know, another 14 million. That gives us a loss from operations sitting at $17 million. They lost $17 million running the business. And notice this interest expense too. They have to pay a lot of money to finance this business since they're not making any money. We'll talk about debt here in a second on this company. Last quarter, they lost $8 million. So these are red flags these are all red flags in my opinion. This is not a stock I would buy from a fundamental perspective. We got declining top line revenue. I'd rather just buy a Google or a Facebook that's growing their top line revenue, that have high gross margins, have high gross profits, that are doing buybacks, that have dividends, those types of things. Okay. Now we've got our total cost of revenue. So we have negative gross margins. We've got declining revenue and we're losing money on that revenue. Those are big problems. And not only that, they're losing money. Look, I don't mind investing in companies that are losing money, but not ones that have declining revenue and negative gross margins. That is an absolute stone cold problem. Now, up to the balance sheet. Let's take a look how well capitalized this company is. We've got the right-hand column. This looks like maybe a 6-month period here. We've got cash and cash equivalents down a little bit of restricted cash, all things being equal. Things are about the same here from a cash perspective. Got a little bit more here in receivables. That gives us total current assets up from 233 up to 245. All things being considered, everything looks okay from the asset side, although this is a company, since they're losing money from a gross margin perspective and an operating perspective, you'd expect that cash to continue to burn down. Now, they've got quite a bit of long-term debt down here, sitting at about 75 million. Now, they've cut that in half a little bit. Some of that debt is moved up here to a current proportion, but how have they financed that? Look, they've paid down their debt. Well, what have they done? Well, forgive me for a second. We got to scoot down here. Here's common stock issuance neta fees. They've made $156 million selling the shares. And so this is how this company has financed, because obviously they're losing money. They have declining revenues. Take a look here from a cash flow perspective for a 6-month period. Just operating the business, they've lost $41 million. $41 million. $41 million operate from a business perspective. They've had cash flow out of the business. Now, they've also invested, quite a bit. They've got project asset expenditures. They spent $21 million on that. So in terms of running the business and investing in the business over the last 6 months, they've burned through $63 million worth of cash. It's a company with not that much money in the bank. So how do they do it? They get common shareholders to buy the stock, and that's $156 million. So that's a problem when the stock declines like this, since they are financing this company by issuing the shares. You get a decline in stock price like this, then that becomes a big issue, okay? Because they're going to have to issue more and more shares with this one, okay? And if they do it at a lower price, that could send this thing lower because it's basically dilution, okay? So we'll talk about that broadly as well. So moving over from a technical perspective, let's take a look at FuelCell Energy stock. This thing obviously has been in a downtrend. Now, it kind of looks like to me we basically broke out of this downtrend. Okay, we were in a pretty steep downtrend. That's not the best trend line, but it gives you an idea. Well, we broke out of that, okay? And so are we forming a bottom here? I would say in a shorter term, it kind of looks like it to me, although the Q2 earnings unfortunately spit this one down. Okay, we came back up into an area of resistance here, right about $12 per share. You notice $12 per share was support level for this stock, and it's kind of the launching pad to our initial rally up over $29 per share. And once it broke this $12 level, it kind of came all the way down here to, this thing's bottomed out into the $7 per share range as well. So this stock, in my opinion, could be tradable. Okay, I wouldn't necessarily, from a fundamental perspective, $3 billion plus, almost $4 billion valuation, declining revenues, negative cash flows, negative everything. The only way this company is making money is by selling the shares of the company. I wouldn't want to hold this stock for the long term. But I tell you what, you come down here to $8 per share, which is only about $2 lower than where it's at. Even a little higher than that. I think you could come in here if you wanted to at about $9 per share. And again, I'm just throwing out numbers. You can kind of come in here and, figure these things out. I am talking from a trade perspective. And if you're going to set up a trade in a company like this, you need to do three things. You need to pick an entry price. You need to pick an exit price. And most importantly, you need to set a stop loss. On this company, I would set a stop loss absolutely around the $7 per share range. You break this $7 per share range and look out below. You're probably coming, this thing probably come down to $2 per share, $3 per share. This thing would just fall off a cliff if it came down under $7 per share. But look, you should have some support underneath this stock at around $8, $9 per share. That is where I think you could legitimately open up a kind of a shorter term bounce, because look, you've got $4 in upside, especially if you catch it down here at $8 per share. You got about $3 in upside at $9. I think this thing could walk back up to $12, just like it did right before earnings. So investors got excited right before earnings. Maybe we'll get a good number. We were right here at $12 yesterday, and boom, we got rejected down here at about $10 per share. Now the momentum is broken. We've now kind of pierced through our lower lows. Technically, this thing looks like it wants to head lower, at least in the shorter term. You could pick it up down here, set a stop loss. I emphasize that at 7, and this thing could bounce. So there could be a trade opportunity. There's probably better setups out there. I'm really just giving you a little bit of hope. If you happen to own FuelCell, maybe you own it at a higher price. Maybe you can kind of trade it down in this range and generate a little bit of a profit. I don't know if that's really that effective strategy. What I would do is, if you own FuelCell at a higher price, you need to evaluate why you bought it at that higher price. Were you buying it on the hype of a new president and he was going to deliver all this, alternative energy stuff? Just realize every president, Republican, Democrat, Independent, doesn't matter who it is, they're going to say a lot of stuff. They're not going to be able to deliver on almost all of it, okay? And this is not a criticism of our current president or any president we've had in the past. It's just a fact. These people just cannot deliver on these things in a short period of time. And so if you bought it for that reason, if you bought it for any reason, you need to really evaluate those, because from a fundamental perspective, this is an absolute disaster. You've got negative earnings growth, you've got negative gross profits, and obviously you have negative operating profits as well. So hopefully you guys enjoyed this video. Hopefully you learned a few things. If you didn't, stay tuned for the channel. We'll try to include more videos in the future. That was FuelCell Energy. Hopefully you guys have a great day. Good luck with your investments.